Good morning, traders. It's 8:01 a.m. Chicago time on the 28th of October 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Strong earnings from Apple yesterday caused a big pop up in equities, the equities indices. Gilead also reported. This pop was later retraced. We're back. We went back to the scene of the crime, as I call it. The entire overnight range in the NQ is contained in the one bar that came after the Apple's good release and Twitter's disappointing one. Germany's November GfK consumer confidence came in at 9.4, in line. VW reported yesterday Q3 net loss at 1.67 billion versus 1.6 billion. This is the first report after the scandal, showing a loss of operational loss of 3.48 billion versus 3.27. So those numbers are not looking good. It's revising to 51.5 billion versus 50.8 billion. Not sure how they're doing that. Northrop Grumman also reported $2.41 versus 2.21, 5.98 billion versus 5.84 billion. Northrop also announced that it won a contract for 100 bombers for the U.S. government at the value of $80 billion. So the market is moving right now on really good earnings so far, and that story continues. Looking at today, the first release that we're going to get this morning is the 9:30 crude oil inventories, expecting 3.1 million barrels. Distillate inventories negative 1.5, gasoline inventories negative 1.1, and then the big one today is the FOMC rate decision at 1 o'clock Central, 2 Eastern, expecting 0% on the lower end, 0.25 on the higher end. There were several speakers overnight. ECB came out in force. ECB's Hansen, Prate, and Visco spoke. And then at 9:45 Central, we're looking for ECB's Constancio speaking in Berlin. So pretty busy calendar today. Just keep an eye out for the FOMC. It's likely to be pretty quiet until then. Let's look at what we looked at yesterday, what we expected yesterday versus what we got. I'm sounding like a broken record here. It's the Trader Bite might not seem to be giving you anything new because there really isn't anything new to talk about overall. The market's been in a pretty in a holding pattern, so to speak, for a while now. So if we look at, let me send this to the back. So if we look at what we've done since the last high, 2117, we're looking at this profile. Let's change the color here. Let's make it a green profile. So if we look at what we've done since we've made new highs, we've dropped. We've traded sideways for quite some time, and then we started to climb. We had a pretty strong push out of this sideways range, this rotational range. We cleared a major hurdle here at 2030, which I've been expecting us to revisit, and we are now trading in this high volume node that's up top. This high volume node that's up top, and it's we've been basically sitting sideways since. So not much to report. You can see that the range has dropped quite a bit. Volumes holding at the first standard, at the point of control. In other words, the most common. There's nothing unusual going on. The market's in a holding pattern. This type of activity usually follows rallies and precedes a continuation in the rally. I am looking for some sort of a pullback to advertise prices lower. to spur more buyers in. But we haven't received that. Yesterday we got some. We didn't, the day before, Monday was an inside day. Yesterday broke to the lower side, which was what was expected on Hypo 2. Hypo 1 yesterday was for us to open out of range like we did down here, and then for us to start moving up, pull back to the last low, push up to 64.75, which is the point of control from Monday, and the 3-day point of control, 2-day point of control, and then to start walking itself up through towards 84.75. That was Hypo 1. Hypo 2 is exactly what happened. We push up, unable to hold in yesterday's range, retest, and then start moving lower. And the expectation for Hypo 2 is that it could drop down into the 45.50 area. Hypo 3 was an aggressive selling, aggressive rejection, an OTD type opening, open test drive. In other words, start to float up and then see a driver come down, push to 45.50 quickly, and then lower. We got Hypo 2 yesterday, and then we sat completely sideways. Most of the volume sitting in the middle. Yesterday's range, so if we back out a little bit just to get an idea of where the context is coming from, if we back off a little bit, we can see that these 3 days here, I put a profile around them. These 3 days are boxed in, so we can see what we've got. And these 3 days have been completely in balance. And we've tried to move into Thursday's profile. Remember, the last 3 Thursdays we've had really strong movements. That's when OTF has been active. And that's tomorrow. Today with the FOMC, the market really couldn't get any traction, any direction. But mostly we've moved the point of control down from 64.75 down to 55.50. We finished above it, however, but the point of control has been shifting down. The market's accepting value lower with lower highs. It's an inside day, lower high, higher low, but we have a lower high, lower low yesterday in price action, but overall value is lower as well. So this morning, given how we reacted in the overnight session, given the earnings, the earnings were all accounted for right here on this first bar, and then we ended up making a higher high, higher low. Here's the higher high. We pull back, we make a higher low, we make a higher high, and then now we're in the middle of that range. And you can see that this profile is completely has a pretty heavy kurtosis in the middle, is completely balanced, and the volume is pretty low, is relatively low for a session that had quite a bit of news in it. So what this is saying is that there's really no real participation by the higher time frame or the bigger participants in the market, and therefore it's another day where we're likely to get a pretty choppy open. We are opening just above, just into yesterday's range, and in the middle of the overnight value. And there's not much to do here because we are also opening smack dab in the middle of this point of control, this black line, which comes from this profile here. So you can see there's a very clear very clear peak in volume right up where we are now. So we're currently trading 63, 64.75, just above is the point of control, the MC point of control, and then the overnight high at 66.50. The expectation this morning, Hypo 1 this morning, is likely to be a complete entanglement in this profile. So I'm looking for it to test all the way up to 69, 69 and a quarter, and down into the 59.50 area, and not much more until the FOMC. I'll be happy to see it move farther. I'd like to be wrong in that sense. That gives us a little bit more activity. But my primary hypo is that. So I'm trading from the outside in, meaning more of a mean reversion plan, more of an excess selling and buying excesses this morning until it breaks out. The breakout will cause a loss, but the probabilities are stacked in favor of a sideways market, and that's basically how I'll be approaching the trade today. So that's how things are setting up so far. A break lower again. Like I said, you're probably not getting too much out of these trader bites these days. The market's just been in a repetitive cycle. A break higher targets the MC high, which is this price here, 73.50. Then we're looking at 84.50 as the key target above. That's a big area above. Break below 45.50. We closed this gap yesterday from Thursday. That's done. We closed the gap from the 19th to the 20th as well of August. That's done. So we're left with 45.50, and then the next area down will likely to be 20.30 on the composite LVN. So simple enough, right? Just a quick word about, I don't have much more to cover here. Oil is still on track for continuation in its drop. It's rallied a little bit today. Crude oil is up 1.3% this morning, but the expectation is here it is. It's hitting the stem, this thin volume area below, and I expect it to continue to do so all the way down into this 40, 60 area or so. That's what I'm looking for in crude. I think it's the way it's showing, it's auctioning is to show us that it really has no real support below here. It's cut through the balance area that we had before, and it's just completely sliced through it. So the expectation is it'll continue lower into the next balance zone, which starts at 40.60 down here. You can see it on the composite. Starts at 40.60 and goes all the way down to 39. So it doesn't look too hot for crude on the buy side right now. Okay. Just a quick word. I know I haven't done those trade wisdom sessions. They required too much time on my part. I know they're very popular and they're heavily watched. I think a couple thousand views on those. But I want to speak again to fear, and I want to remind traders that fear is a big emotion that has caused us to survive as a species right now. I'm not going to get into psychology and anthropology and whatnot, but I'm going to tell you that it is a very formidable force within us, a survival force. Most of the time, the fear that you feel once you put a trade on live, especially if you are pushing the envelope with your leverage, in other words, you're putting on a bigger position than you're normally comfortable with, most of the fear that you sense is manufactured. Fear is basically a story that we tell ourselves and that we believe. It's almost like speaking of something that's not real and then believing that something and responding to it. The best way to deal with fear is simply to keep taking live trades, is to keep practicing and working on a goal. So this week you should be, as I've talked about before, you should be identifying and working towards a goal. Your goal for this week is to take every setup and not interfere with the outcome. Or your goal this week is to improve your expectancy by a half a tick or a quarter of a tick. This week, whatever it is, you should be identifying what the issue is that you're having and working and creating an attainable goal for the week and then measuring your performance and basing your performance on it. What that's going to do is it's going to prevent you from taking random emotional trades and keep you focused on what you need to be working on. In other words, it'll help filter your trades. This has worked for all of my prop guys. But fear is also something that you have to be aware of but not respond to. You have the option to not respond to your fear when you're trading. If you're responsive to your fear, then you're constantly in this frustrated, elated, euphoric, frustrated, disappointed cycle. It just keeps going round and round and round, and it's not something that is sustainable in trading. If it does not take a toll, financial toll on your account, it's going to take a financial toll on your emotional capital, and it's not something that you can sustain for a long period of time. So be aware of when your mind is starting to formulate a story. And when our minds are in a fear mode, studies have shown, my experience has shown to me that I will tend to exaggerate those things that I fear. I'll tend to exaggerate the outcome that I fear. If my biggest disappointment or fear is that I get one ticked into a stop out of a trade before it runs 10 points the other way, then I'm going to remember every time that happens as if it happens every single time, when actually statistically uh, it has only occurred 1 in 20 trades. But I'll remember that one trade like it was yesterday, like it was the last trade, and I'll keep taking actions, emotional actions, to avoid that outcome. So it's one of the things that sets us back in our progress. And I have a lot of experience with this. It's just something that I've seen over and over again, and it's hard to get rid of. But ultimately, the only way to get rid of it is to devise a simple plan, just a very simple plan. Any plan is better than none, and then to monitor your progress against that plan, and then to set goals, and then monitor how you're doing with those goals, and then you're then able to identify what is going on with your system. It's like troubleshooting a computer or something. You kind of check, remove all the components and put one in, and start and test, and put one in and start and test until you identify where the problem is, and then you solve that problem. You take steps to solve that problem. The only way around fear is more practice and a clear plan that inspires your confidence. Okay, so coming in and saying I'm passionate about trading and I'm doing this with a passion, but just getting in there and just sloshing around and creating havoc and creating terrible habits. Yes, it's great to have a passion in doing things, but it's better to have a plan that you're passionate about rather than a passion with no plan. Okay, so the whole idea is to keep you in the business and to keep you trading for as long as possible. Good luck to you, and take care.